Good morning, gang. How are we doing today? It is a pleasure, as always. It's a pleasure to be with you all. My name is Jason Krutzky, and this is TrendSpider Office Hours, or as we affectionately renamed it on Wednesday, TrendSpider and Chill. Hope you guys are doing good this morning. I'm doing well. I'm sorry that I'm a few minutes late to this thing. Got a little overwhelmed with some stuff this morning. We are back in the zone. And for today's show, I have zero agenda. You know, sometimes I like to come to these shows with a plan. I like to show you guys a particular tool or some new thing that we're developing or what have you. Well, this show, we have no plan. This show is all about you guys. See that there are a few of you here right now. So thank you for being here with me. If you are here right now, please say hello. Let me know where you're tuning in from. Let me know your name. I imagine that we got at least one or two repeat folks here. So hopefully we see some friends. And yeah, so today, like I said, I'm here to answer your questions. We've got a huge sale going on right now, the St. Patrick's Day sale. You can save up to 67% on your first year of TrendSpider. So if you are not yet a TrendSpider trader and you're considering becoming, signing up for TrendSpider, you're considering jumping on and getting on the platform, now is a great time to do that because the deals are abound. They won't be around very long, but they are abound. And it's my presumption that perhaps some of you have just signed up in the past day or two. And if there's anybody here right now that just signed up because of the St. Patrick's Day sale, I want to speak to you specifically. You're new to the platform, and I want to help you get to a place where you understand how to utilize it. It's super powerful. There's lots to learn about. So if anybody who's tuned in right now is brand new to TrendSpider and you've tuned in today to kind of get some questions answered, please send those questions in the chat. I encourage all of you guys to, speak up, say hello in the chat. Tell me who you are. Tell me why you're here. Tell me what you're looking at. Like I said, I don't really have a plan today. I'm just kind of winging it. So we could kind of do whatever. We could look at charts. We could analyze some charts. If you want to do that, we could talk particular indicators or particular tools on the platform. Hit me with what you got. I see that the markets have been selling off this morning. You know, you got that kind of slightly hotter than expected CPI reading on Tuesday, and markets ended up running on Tuesday, which was kind of a little maybe unexpected, and consolidated for the past 2 days. And now we're starting to see a little bit of a breakdown. Got a big gap to fill here on the Qs. That could potentially come at some point. I guess we'll have to see. I know also triple witching today, right? I don't know a ton about triple witching and how exactly it all works, but I do know that our good friends over at Spot Gamma were talking about it this past weekend. I received an email all about triple witching. So what's up, guys? There are a few of you here. Please say hello. I'm talking into the void otherwise. And though I'm happy to talk into the void, I would much prefer to talk to a human being on the other end of the internet. So wherever you're tuned in from, if you're here, say hello and hit me with what you got. You got to have something. You got to have a question. You got to have a particular ticker that you're looking at. You got to have something, right? Anything. Give me something to work off of. No, nobody wants to chat. There he is, my good friend Larry Johnson. Larry, all right, talk to me, sir. What are you looking at today? What are you watching? What are you trading? Did you come today with any particular questions? All right, here we go. The questions are coming. What about looking for gappers that you can take advantage of in the morning? Sure, let me show you how that works. All right, so what is a gap? What is a gap? A gap is when the low of a candle is greater than the high of the previous candle, or the high of the candle is less than the low of the previous candle, right, Larry? So in order to script a gap, I want to teach you how to do things instead of like relying on the platform to have it pre-built. So I want to just show you how this would work. So what we could say here, I'm going to say price dot high or price dot low greater than price dot high and say apply. So you got price low greater than price high. And then all we want to do here is we're going to just say one candle ago. So what this would look for is a gap, right? Your low is greater than the previous candle high. This is on the daily time frame. We could also reverse that. So I'm going to say condition. Actually, let's just utilize GPT. So we'll say price dot high less than price dot low and apply. And again, oh darn, it didn't work. Weird. Huh. All right, well, price dot high less than price dot low one candle ago. I'm going to change this all of the following to any of the following so that it looks for either of these things. And then another idea here. Just to the right of each of these conditions, you see this three dots. So if we click on that, we could say by at least, and then you can define a percentage margin upon which the price is, the low is higher than the previous candle high, or the high is less than the previous candle low by X percent. So you can define the kind of like the amount of the gap. So you might want to do that. I'm not saying that you should, but I'm saying you might. And if you might want to, know that that functionality is there. Now, the last piece of this, if you're not familiar with this current candle toggle, this is really, really important to understand the current candle toggle. By default, the current candle is toggled off. And that's because if the current candle is toggled on, then it's looking for these conditions to be true on the current candle that's forming. So essentially, it's looking for this to be true today. It's looking for either a gap up or a gap down on the daily today. Well, in the case of a gap, that makes a lot of sense. But what if we were looking for like a moving average cross on the daily? And at 10:30 in the morning, the moving averages are crossed, but then by 1:30 in the afternoon, they are no longer crossed. So at 10:30 in the morning, your condition is true, but then at 1:30, it's not. Depending on your needs as a trader, what you're looking for specifically, you might deem that it's very important that the daily candle closes with that moving average cross condition being true, right? So this is your way to define that. If the current candle's toggled on, it's saying that the condition is true right now on the current candle that's forming. If the current candle is toggled off, it's saying that the condition is absolutely true because the previous candle closed and that condition was true. Does that make sense? Like if the current candle's toggled on and it finds moving averages on the daily or moving average crosses on the daily, then currently they're crossing, but later today something could happen and they're not crossing anymore. So then the condition could be not true later. If the current candle's toggled off, then the condition is absolutely true because the candle closed and the condition was true. It's just that it happened on the previous candle. So hopefully that makes sense for you. So yeah, so let's do this. I see a couple of questions have come in. I'm going to get to all of them, but Larry, do you want to refine this in any way, or maybe I could just save this as is and send it along to you so that you have it? Does that seem like a good idea? So we'll say gap up or down. We'll call it daily. Gap up or down. I'm going to put this through a bigger list, maybe the NYSE composite, so that you're not limited to just the 30 names. So here are all of your gappers. Now, one thing instantly that I see here, you got one stock that's 2 cents. Like we might want to screen that out. So I'm going to add a parameter here. I don't want to make any assumptions, Larry, about the types of stocks that you trade, but my guess is you probably don't trade stocks that are 2 cents. So what I'm going to do is I'm going to add a condition. I'm going to say price daily close, greater than a constant value of, let's say, $5. And you could always go back in and change this if you want to, but this is just saying that stock's at least $5. Another thing that I love to add as like a filtering mechanic, especially when I'm utilizing these big lists like NYSE Composite or NMS Composite or what have you, I like to include a volume condition. So I'll say something like daily average volume, use this moving average, is greater than a constant value of like whatever you want for minimum volume traded per day. Different people have different requirements there. 250,000 shares a day, 500,000 shares a day, 1 million shares a day. But again, both of these conditions are just built to just filter out some of the noisy, low volume, penny stock type stocks. So let's save this real quick. I'm going to rerun it for you, and then we'll send it along to you so that you have it. Anybody who wants this, feel free to download it into their account as soon as I send it along. And then if you want to make adjustments to it, just make sure that you create your own copy. So we're going to send this over to you, Larry. There you go, sir. And if we just want to see this in action, oh, shoot. You know what? Oops, Larry. Bro, my bad. Hold on. We're going to do this. I'm going to delete that. We don't want that link. Hold up. I accidentally put those two conditions under the any of the following criteria. That's not what we want. And also, now that I'm thinking about it a little bit more, we've defined that the low is less than, or we've defined that the low is greater than the high, or that the high is less than the low, but we're not currently defining that the current price is less too. So we might want to do that as well. So let's do this. I'm going to rewrite this. Let's talk through how we should be doing this. All right, so I'm going to create some condition groups here because we want to look for gap ups or gap downs in the same scan, right? So again, let's do the gap up. So we're going to say today's daily low is greater than yesterday's daily high, right? But then we also want to say that the current price is greater than presumably today's low, right? Because we don't want it to like gap up and then come back in. We're looking for the proper gaps, right? So we might want to say that too. We might want to say price close greater than price daily low. And we'll leave this as the current candle so that we've defined the gap up here. I'll run this scan really quick so we see what we find. So you can kind of see what we're finding here. We might even want to, let's do this. Let's add this margin back. All right, so now we're really finding what we're looking for. Now that we've kind of more specifically defined the criteria, right? And we've also whittled down the list quite a bit. So here are your big gap ups. These are gap ups of at least 1%. You could make this like 0.5% if you wanted to, and we'll probably get some more names. This is going to be a good lesson, actually, for y'all learning how to like write scripts. All right, so you see how we're getting all of these gap uppers of at least 0.5%, but then we said we also wanted to scan for gap downs in this same scan. So what we're going to do is we're going to go to add a parameter up here, and we're going to say condition group, and we're going to create a secondary condition group, but with the opposite conditions, right? So then we're going to say today's high is less than price daily low, one candle ago. And we're going to say that that the current price close, is less than price daily high today, right? And again, we're going to define by at least 0.5. So here's our gap up, here's our gap down, and then we need to find both of them. So we need to change all the following to any of the following. And now we've got, this is going to find either your gap ups or your gap downs. And the reason why we sequestered these in different condition groups is so that they could be unique unto themselves. If these 4 conditions were in the same group and you said all of that was true, it wouldn't be possible. You wouldn't get any results, right? So I'm going to rerun this scan. I'm glad I made that mistake. It's good to make mistakes so that you guys can kind of learn. All right, so you see what it's finding now. It's finding the gap downs and the gap ups, right? Again, it's found this dumb 2-cent stock. So we might want to then add a condition up here. Actually, let's add a condition. I guess we could add price criteria inside both of these condition groups. Because if we added the criteria right here, if we said, let's just talk about this really quick. Price daily close greater than a constant value of 5. Well, because it's under the any of the following says we're looking for anything under $5 or a gap up or a gap down, right? So then we would need to define that price condition or those price conditions and the volume conditions in both of the condition groups. So I'll leave that to you to do, and I'll save this once more. And now I'll send it along. Let's update it real quick. All right, so next question. Well, Larry, let me know if that all makes sense to you. If it doesn't make sense, let me know. I'm happy to explain anything. The next question, let's see, from John from Seattle. What's up, John? Big fan of TrendSpider. First time on the daily. Right on, man. Well, thank you so much for being here. Welcome. You are always welcome anytime. Hey, Chris. Thank you for being here too. Good to see you. All right, so John, you're trying to create a scanner that displays a TTM breakout at the first green dot. All right, let's talk about it. Hold on. Let's get this thing sent over to you first. Gosh, this is taking, here we go. Okay. All right, so Larry, there you go, sir. And you know, anybody else who's tuned in, if you guys want that gap up, gap down scan, feel free. It's all yours. I'm going to show you this real quick. I'm almost certain. Let me make sure that we have. Yeah, so inside your shared scanner list, I didn't want to show you this without teaching you kind of like about how to script. Because that's what this show's all about, right? It's about like learning how to do stuff. Inside your scanner, your shared scanner list are simple gap up and gap down scans. So you're welcome to utilize these too if you're looking for just the gap up, just the gap down. But, you know, I like to show you both ways. It's good to know how to script things on your own, because what you're going to find is with all the shared scanners, they're going to get you part of the way there, but they may not find exactly what you're looking for. And then you're going to have to do the rest of the work. You're going to have to, you know, we'll get you 75, 80% of the way there. And then you're going to have to add your 20% spice that makes it your style of trade. So knowing how to script, super, super important. All right, so let's talk about MACD dot flips. And I'm going to tell you right now that, let's see. When I search MACD, I just want to see what's here. Recent MACD bear cross, recent MACD bull cross. Another place that we can look, I just want to see if there's anything there before I show you how to do it myself. In your script manager, let me show you this again. Go to Visual Scripts and search MACD. And then in here, there's going to be a bunch of stuff that's called sample, titled sample. So this is going to be pre-built stuff for you too. But I don't believe that this is giving us the dots. So let's add something here. I'm going to add MACD so that we can look at it. So are you looking for oh, TTM. Gosh, I'm so stupid. Why am I talking about MACD when you said TTM? Jeez, I'm sorry. TTM. So on TrendSpider, okay, this is important to know. On TrendSpider, TTM Squeeze is a registered trademarked brand name that we're not allowed to use. So what is a TTM Squeeze? Well, a TTM Squeeze is just a condition of the Bollinger Bands and the Keltner channels, right? So type in BBKC, and here's your BBKC Squeeze. BBKC Squeeze is the same thing as a TTM Squeeze. So that's the first piece, right? That's the first piece that you need to know. The next piece, let's go to Visual Scripts and type in BBKC. BBKC Squeeze off, BBKC Squeeze on. Interesting. Why are there two of these? Huh. All right. So check this out. I'm going to send this to the scanner. So I just want to see something really quick. Because I never use BBKC Squeeze personally. Nothing wrong with it. Just saying I don't. Oh, I see. I see. Okie dokie. So what I'm going to do, we're going to learn not just about BBKC Squeeze. We're going to learn about exactly how it works. I'm going to learn with you guys. All right, so you've got your Keltner channels in yellow. You've got your Bollinger Bands in blue. And when do we get the squeeze? When does it go from red to green? It goes from red to green when the Keltner channels are inside the Bollinger Bands, right? It goes from green to red when the Keltner channels leave the Bollinger Bands, when the Bollinger Bands are inside the Keltner channels. So you could define it that way, or let's do it this way. Indicator daily. And then I just want to see if I'm right here. Nope. Let's see. I'm just testing something. I don't want to talk you through the process until I know that I'm right. All right, so maybe it's the signal. Yeah. Okay. So it's a signal. Okay. Inside the scanner or inside your conditions, let's talk through it. Go to indicator, go to daily. And if you type in BBKC, you're going to see two options, the signal and the squeeze. The squeeze option represents the histogram. The signal represents the dot. So if you're looking for a dot flip, you're looking from green to red. Red is going to be a signal value of less than 0. And green is going to be a signal value of greater than 0. So do you see what I did here? I said the signal one candle ago was less than 0, and the signal on the current candle is greater than 0. So that's looking for that flip from red to green. You see over here do you see what it's finding? If you wanted to get the signal from green to red, then you would flip this and you would say the signal was greater than 0 1 candle ago. The signal is less than 0 on the current candle. Hopefully that makes sense. So what I'm going to do now with this is I'm going to create kind of the same thing for you that I just created for Larry. Presumably, is this what you want? Before I create it, is this what you want? You just want the green dot, the first green dot? Do you want the first red dot after a series of green dots? And then also, dude, do you want to define how many red dots it had before the green dot? Because if it goes like green, red, green, that's a lot different than going red, 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 green, right? And you could define that, but I need to know if you want to define that. Chewy. Not possible at this time. It's not possible to define that condition just yet. However, I wonder. Wait up. I wonder. All right, so I'm going to go out on a limb and say that I bet that functionality is coming soon. I wouldn't be able to give you a date on it, but this is a premiere here. You guys tune into this show for a good reason, to learn and to see what's going on, the latest developments. So if you go to your other data button, check it out. Fundamentals. This is a new value that's just been added. If we go to that fundamentals option, type in a series like market cap. Well, here's our market cap of this particular name. Is this going to work for crypto? Let's see. I'm learning here along with you guys. Not available for crypto yet. Well, hopefully it'll come. Okay, John. So that's huge. You understand what I'm doing. Awesome. So let's do this then. Since we're looking for this move from red to green, let's define multiple red, right? So here's what I'm going to do. I'm going to rewrite this script. So I'm going to say signal, indicator, daily, signal greater than a constant value of 0 on the current candle. And then I'm going to duplicate this. I'm going to change this to less than a constant value of 0 1 candle ago. And then I'm going to duplicate the crap out of this. I'm going to do like 10 of them. And I'm going to say 1 candle ago is red, 2 candles ago is red, 3 candles ago is red, 4, 5, 6, 7, 8, 9. Let's do that. That's 10 conditions that define what we're looking for here. 9 candles red in a row, and then it went green. So I'm going to change this to NYSE and say scan. So you see what we're finding here now? Lots of red, lots of red, lots of red in a row ahead of that green flip. All right, so John, is there anything else you want to add to this idea? Or does that feel good? Oh, Pimp Hop, are you still here? I got you next. I'm sorry, I skipped over your question. How do we set up a scan for stocks that close in the top or bottom 25% of their range? I'll show you. All right, so let's do this. We're going to say green dot flip. John, it's no problem at all. That's what I'm here to do, buddy. All right, so I'm going to share this with you. Just remember, please make your own copies of these. If you load these, or if you bring these into your account, just make your own copies. Periodically, I will go in and I'll delete because my account gets overrun with these things. So periodically, I will go in and delete them. If you make your own copy, then you'll always have it. There you go, John. Thank you for the question, sir. I appreciate it. Thank you for the question, sir. I appreciate it. Let's speak English this morning. All right, so new scanner talking about range. First off, Pimp Hop. What range? What time frame are we talking about here? You talking about 50-day range? Are you talking about 5-day range? Are you talking about what kind of range are we talking about? While I'm waiting for the answer there, I'm going to remove some items. And I'm going to add an item. Range. You can use dungeon channels for this too. So let's talk about range. For the sake of this, I'm going to make this a little bit bigger. I'm going to make this length a little bit bigger. So by default, range is 20 candles. So it's going to be drawing that range, just one daily candle. Okay, so I'm going to use a small time frame. Let's think through this. Let's do like 6 candle range on the hourly. Or, I don't know. Maybe we should do... Let me see something. Well, okay, hold on. You mean the close in relation to the higher low? Yeah, okay, see, that's what I was just thinking in my head. Okay, so then what you would just say, simply, price close, price daily close, is within range of price daily high by X percent, so 25. So, or you could, we could duplicate this and say price close is with range of price daily low by 25%. Pimp Hop. Probably going to get quite a few names here, so I'm going to use a smaller list. What you might even want to do, man, is you might want to quite reduce this 25% value. But if that's what makes sense for you, then by all means, stick with it. Does this kind of achieve what you're looking for? To me, the problem with it is that you get candles that look like this, and yeah, it's within 25% of the low, but I don't know, how meaningful is this? Like, to me, it would make more sense to tighten this up, make it a smaller percentage. Oh, shoot, you know what I'm doing here? Darn, let me change to any of the following. Jeez, I'm a dummy. Yeah, so here you're going to get like much closer to the daily high or low if you use a smaller. Interesting. Yeah. It fits. Yeah, no problem, Chewy. So does this cover you, Pimp? Pimp Hop? Okay, sweet. So I'm going to send this to you. Do you want to keep it at 5% or do you want me to put it back to 25? If 25 is your number, 25 is your number. Don't let me dissuade you. Okay, cool. 25 is your number. Let's do it. Cool. So let's say within 25% of high, low. Yeah, that cool? We'll save it. I'll send this over. Here you go, Mr. Pimp Hop, sir. All right. Next question. Is there a way to scan the whole market? No. However, NYSE composite, 1,863 symbols in the NYSE composite list. NMS composite list, 3,300 symbols in that list. It's about 5,000 names. I think that should do you between those two lists. There's also the Russell 2000 list, which is about 2,000 names. Arun, what is the goal for the green dot flip? Well, when the dot is red, price is said to be squeezing, right? And when the dot is green, price is said to be releasing from the squeeze. So the green dot flip would be a move out of a squeeze, presumably in the direction of the current trend. So if price is squeezing, then in theory it's consolidating, going sideways. A green dot flip would suggest a move out, whether up or down, but a move out of that squeeze. Does that make sense? Hopefully that makes sense. Any other big questions, y'all? This has been awesome. I really appreciate you guys hitting me with some cues. Have I noticed USO-related stocks outperforming SPX this year? I don't pay too much attention to oil. Presumably that's what you're talking about. I don't pay too much attention to oil because other than it powering my car, I don't know. That's all I got. We could see USO from January, from the start of this year. Let's see where we are here. To now, 16.527% gain from the start of the year. Let's just see what SPY's at. SPY currently at 8.83. Yeah, interesting. Yeah, by like double. That's kind of fascinating. But what does it mean, Chewy? This is where maybe perhaps you could educate me. I don't really know. I know that for the past 2 months, inflation has been ticking up. I know that energy ticked up this past print. Energy was like the driving force of the tick up this for February. Put call ratio. No, unfortunately, there's not a way to scan for put call ratio because we don't have full options data at this time. We have unusual options. So if you're not, John, if you're not familiar with what unusual options are, the difference between unusual options and just options. Options obviously is the entire flow. Unusual options is anything above $25,000. Any options order above $25,000. How about a scan that will show us stocks that are outperforming? How do you define outperforming? Because we can definitely do it. Let's start with this. First thing I think of is simply price close yearly. Greater than. Oops, price close. Greater than price yearly open by at least X. How do you define outperforming? Up 20% on the year? Here are all the names that are up 20% on the year, at least. From their open. Yeah, James, you can. Yeah, good eye, good call. So year percentage change. Year dollar change. Actually, use these. Use the year to date. Those are the ones you want to use. Or you can use, like James said, the 52 week. Nice. That's smart, James. Scanning for stocks that have options. No, unfortunately, that is not possible either. Is that what you're saying when you say only optional? Is there a scan for that? Is that what you mean? For example, sorry, James. Everybody, James is the fair leader of our customer support team. So if anybody has any questions throughout the day and I'm not around, James might be one of the guys that you speak to. Very smart fellow, and awesome in his ability to help you guys at any given time. Which leads me to remind you guys, for anybody who's just now tuning in for the first time, maybe not super familiar with the platform or with the show, I do these shows a couple of days a week. Try to do them Monday, Wednesday, Friday. You know, it's sometimes variable depending. But down here in the bottom right-hand corner, this contact us button right behind my head. This is a direct feed into our employee chat room. These guys are product experts, and they are live every single day, Monday through Sunday, about 20 hours a week, or 20 hours a day during the week, about 8 hours a day on the weekends. If you ever have questions about the platform, hit them. They are there to answer those questions. All right, Keith, you'd like to do a simple scan and you're struggling. You just want to scan for a cross on an SMA 200. You want to see price crossing up on it? And on what time frame? Awesome, Keith. Thanks, man. I'm glad you like it. It's pretty cool. So let me show you a cross up or a cross down. A couple of different ways that you can think about doing it. On the 1 month, you're looking for the 200 month. Is that what you're saying? The 200 month price crossing up on the 200 month SMA? Oh, okay. So look, I'll show you. So go to add parameter. say condition, say indicator. No duration. Okay, cool. So we'll just use the daily. So I'm saying indicator, I'm typing in SMA, I'm selecting SMA, and then I'm scrolling down to where it says prices touched it, prices bounced off of it, prices broke through it. So I'm going to say prices broken through it. I'm going to leave the buffer area width as 0, right? Leave the buffer area width as 0. And then I'm also going to say price closed greater than indicator SMA. Oops. I'm going to come in and I'm going to change the lengths to 200. So this is one way that you could go about it. So I'm saying that price broke through. Price broke through does not define the direction upon which price broke through. So you then have to define the direction as well. How do we define the direction? Well, we do it by defining where price is relative to the SMA. So it broke through and it's greater than. Cool. Let's see if we got any. Oh, quite a few. Interesting. I'm going to show you an alternative way to do it as well. Chink. There you go. You see what we got here? There's your 200 SMA. With price breaking through. Now, I'm going to call this 200 SMA break through up. I'm going to send it to you. Hold on one second. Let's share this. So Keith, here you go. What I would encourage you to do, sir, play around with this idea. Tool around on it. Try creating your own version. I'm going to show you one other way to think about it, though, too. Because you can use price first. You said that you were putting price on the left side and then the condition. You actually can do that. I'll show you how. So I'm going to say price close, daily, close, less than. Actually, sorry. Price close, greater than, indicator, daily, SMA 200. I'm going to also say price open, price daily open, less than, indicator, daily, SMA 200. So it opened less and it's currently greater than. Same idea. There are almost always multiple ways to script things on the platform. So the way that I showed you, the first way, isn't necessarily absolutely the right way. There are other ways to achieve it. I always like to tell people, when it comes to scanning for conditions that you're looking for, try and, like, in your brain, try and dumb down the idea as much as you can. Instead of thinking I'm looking for a moving average cross, think about what is happening when the moving averages cross. Or I'm looking for price breaking through a moving average. What is happening when that is true? When that's true, price started on one side and it ended on another side, right? So, like, instead of looking for the cross, even though we do offer the ability to define crossed up or crossed or broke through, you know what I mean? There was another question that I know came in. Chewy, outperforming an index like the SPX or Mr. Market? That's a good question. I don't know. I don't know if that's really possible. Let me do something. Because I can say, let's say yearly close. Oh, I'm like stuck on the same song here. Let's start my playlist over. Okay. Let me think about that. Yeah, I don't. I don't think there's a way to define it. TrendSpider order of operations. Yes. There are multiple orders of operations that you can utilize, Brandon. So Chewy, outperforming an index. How do we define? I don't think we could do it. Trying to think through how we can do it. James, are you still here? If you're still here, curious your thoughts on this. I can't think of how we could define that. Because we could, if we wanted to. Let me see something here. Oh, shoot. Yeah, I don't think that can be done. I'm racking my brain to try and figure it out, but I don't think that's possible. Chewy. Like you can do this. Let me show you. Like I can define the conditions of a specific symbol within my scan, but this doesn't really serve the question. Yeah, Chewy, I don't think that's possible. It would be really cool if it was, but I don't think it's possible. I'm sorry. I think the best thing that you could do, or the closest thing you could do, is just know how the indexes are performing on a yearly basis. Like if we wanted to, I'm just gonna create something really quick, and let's just do like index. I don't know, index ETF, and say SPY. QQQ, IWM, and then come in here and utilize year-to-date change. So here's your year-to-date change. Oh, hold up. Those are the year change, year-to-date change. That's what we want. So here are your year-to-date values for SPY, percentage-wise. So essentially, like you could be then scanning for, if you wanted to, you could go like NYSE. Here's how we'll do it. So we know that the SPY is up 7.93% on the year. So then you could then scan NYSE composite for anything that's up 8% or more, right? Yearly close greater than price yearly. And I don't know if I guess we would want to define this as open. Yeah. And we'll say current candle. Oops. By at least 8%. Here you go. Here's all of the names that are beating SPY in performance this year. Maybe that's how you do it, Chewy. It's not like the cleanest way, but it's a way. Maybe. Brandon, you're looking for a strategy on a 5-minute bullish, but respect to the 65-minute strategy average? I'm going to need a little bit more information from you on that, Brandon. Can you clarify a little bit more about specifically what you're looking for there? We can definitely define things about the 5-minute and the 65-minute at the same time. That's for sure possible. But what exactly are you asking? Like on exit condition, you don't want to be faked out. But Brandon, like what? I don't know what you're asking for. How are you? You say 5-minute bullish. What's 5-minute bullish to you? Is that a price condition? Is that an indicator condition? And what's your 65-minute strategy average? What does that mean? I need a little bit more. I need information. What are you using? So, Chewy, regarding this, so we'll say, what's up, Juan? Hope you're well. Chewy, I'm going to call this like yearly gain. I don't really know what else to call it. Well, maybe I can't send you this. Yeah, I guess I could send you this. If you want the index, I mean, this is just a very simple little watch list. So here's your little watch list. And what I would say, Chewy, is put all of the index ETFs that you think are worthwhile in there. And then I can save this and share this with you too. Juan, what brings you here today, sir? And how are you doing? Hopefully you're well. Why they don't click yet the sell off? Pure manipulation. Yeah, that I don't know. I can't tell you. Triple witching, perhaps. Triple witching might be that reason. They gotta burn all the options premium is what they gotta do. If they're not selling off right now, I don't know what they're doing, or they're not running it. If it's just like sitting sideways, they are killing premium. All right, so Chewy, there you go. What are they doing? I mean, they're kind of selling it off, man. They're back at daily lows on the Qs. Don't want to lose, say, more than 5% on a 5-minute trend run, but using the 65-minute as a guide, your guys' 65-minute to average price weighted volume. Brandon, I'm still a little confused, my friend. 65-minute to average price weighted volume? I don't know what you mean, brother. I'm just having trouble understanding what you're asking for here, dude. How is the liquidity for shorts today? That I don't know, Juan. We could look at short volume. Looks like short volume on the Qs at least has been ticking up a little bit over the past, what, couple of sessions. Nothing outrageous though. We could look across indexes and see, oh, that's a pretty notable shift up on the SPY. IWM, nothing really notable. SPY looks a little bit the most obvious. Where I'd be looking is like over here. NVIDIA, SMCI, some of these like really hot ones. All right, so I'm at an hour here. Generally, I go for an hour and then we call it. No problem, Juan. Brandon, I really want to help you, but I'm uncertain how to. I mean, you can, so again, I'm not really certain what, I understand kind of what you're saying. You like to trade the 65-minute, but you miss things on the 5, perhaps. So one thought, I want to help you. One thought could be this. I'm going to give you a couple of thoughts, and then, you know, keep showing up for these live streams, and maybe we can like get you a little bit more squared away in a future one. So one thought here is utilizing MTFA. MTFA stands for multi-time frame analysis. It allows us to compare 2 time frames at once. So here I'm looking at the 5-minute chart, and I'm going to add right here where it says none. There's a secondary time frame drop down menu. So I'm going to add the 65. And so what this does, I'm going to switch my SMA 200 to a 20. Just so that you understand what this is doing. So what MTFA is doing, it's able to show you your indicators, your trend lines, those sorts of things on 2 time frames at once with just one chart up. In every instance of a tool, like a moving average here, you see how this one's solid and this one is dashed? So this dashed one represents our secondary time frame. This solid one represents the time frame that our chart is on, which is the 5-minute. So perhaps maybe this can help you, because if you're looking for 5-minute trends starting, right, but you also want confirmation from your 65-minute time frame that you love to trade, this might be a way that you can see that on the 5-minute. See how price is starting to gain this moving average. The moving average is looking like it's trying to find a bottom and curling up. Prices gained it and tested it and held it, but we're still under that 65 period moving average. And you see how that 65 period moving average was support when it was it acted as support, and now it's below it. So potentially this 5-minute this 5-minute moving average might be signaling that, hey, in the short term, this thing might be curling up and trying to gain. Well, maybe if this is I'm not saying this is what you should do. I'm saying maybe what's happening here is this is telling you, hey, on the 5-minute time frame, I should be thinking about a 5-minute time frame long opportunity, but I'm going to use my 65-minute moving average up here as my target. And maybe you're thinking like, I want to get long with the idea of price coming and testing this 65-minute moving average from below now. So if that's your idea and you say, hey, I want to get long right now and I want to use this old low, the day's low as my stop, and I want to use this 65-minute hourly or 65-minute moving average as my target, then you can use your risk to reward tool. You could draw up to your 65-minute moving average. You could draw down to your stop, and you can immediately determine, does this trade have the risk reward value that I need in order to take that risk? Am I willing to risk whatever for a 1.27 R? Meaning, am I willing to risk $1 to make 25 cents is basically what you're asking yourself. So I don't like to talk in absolutes when it comes to trades. I never am going to give you guys trading advice ever. But I will give you advice on how to think about setting up your trades. And one of my favorite ways to do it is utilizing the risk reward drawing tool. Whatever your trade idea is, before you take the trade, if your trade idea is price is above this 5-minute SMA, I want to be long above it with a stop below today's low and a target of this 65-minute SMA. If that's your trade idea and you want to be long right now, well, then you use your R tool, start it at where price is right now, measure up to your target, measure down to your stop loss, and look at the risk to reward and say, is that risk to reward valuable to me? Am I willing to risk $1 for 25 cents or $4 for $1? Or, you can do the math there. Risk reward drawing tool is right here. It's called the draw position tool. And it is a quick and dirty way of knowing whether or not your trade idea has merit. Because if you're trading, if you have a trade idea that's a 1R, meaning you're risking $1 to make $1, that's not very good R. If every trade that you take is a 1R trade, you're going to have a very, very hard time staying profitable, right? Think about it like this. If every trade that you take is a 3R trade, I'm going to just move this up to where 3 is. In theory, if every single trade that you take is at least 3R, then you only have to win 33% of the time, right? 1 in 3 trades is going to get you back to break even. If you think this way about every trade that you take, you might start changing the trades that you take. Now, of course, 3 to 1R is a lot harder to hit than 1 to 1R, right? It'll be a lot easier for price to make it to this 65 on this hourly or 65-minute SMA than it will be to make it up to yesterday's highs. A lot harder. You have to decide, can it do that today? Like, think through the scenarios. But that's how I think about trades. No matter what the trade is that I'm taking, we're thinking about R first and foremost. What am I risking and what do I stand to make? And does that ratio make sense? While we're here, let me show you this too. TrendSpider trading and investing calculators. Go trendspider.com/calculators. There's an R calculator here too, trading risk and reward calculator. And you can input, instead of like doing that on the chart, you can input it. You can input the values here and you can see where on the risk curve you are. Basically anything below this red line is kind of considered meh. Right? It's kind of considered like over the long term, a strategy that utilizes that R will not work over the long term, over a duration of multiple trades. If you're in the green up here, then you got a better shot. So I hope that makes sense. I hope you learned something, Brandon. Come back to me next week with some new ideas or with a bit more an expansion of your idea, and we can kind of talk through a little bit more about it. But that's where I would start for you. Multi-time frame analysis and R. All right, so with that, I'm going to get out of here. It has been a pleasure hanging out with you guys today. I appreciate so much all of the questions that you guys brought to the show. This show is nothing without you guys, right? I can sit here all day long and tinker around, but you guys make this show special. So thank you for being here. Brandon, thank you, Keith. Thank you, Juan. Thank you, Chewy. Chewy's a regular. Shout out, Chewy. Thank you, James. Thank you, Larry. Thank you, Pimp Hop. Who else? John. Chris. I think that's everybody. I know there's more of you here. I see you. There are other of you here. You haven't said hello to me. That's okay. All right. So last stuff for you. First off, it is the St. Patrick's Day sale. This sale is going on through the weekend. You can save up to 67% off on your first year of TrendSpider. That is a steal. Harvell, what's up? Sorry you're late. I'm about to leave, but we'll see you again next week. Jorge, thank you, man. Thank you for being here. Okay, so 67% off, up to 67% off your first year of TrendSpider. If you are not yet a TrendSpider user, we'd love to have you on board. A TrendSpider trader. We don't call you guys users. You're TrendSpider traders. We'd love to have you on. If you have any questions about TrendSpider between now and the next one of these shows, hit us up in the chat. Remember, if you're not yet a TrendSpider trader, click on this little button right here. You can talk to these guys. They can answer any questions that you have. If you are a TrendSpider trader, you will see that here, the contact us button. Click on that thing. Apple, this trade idea is starting to work. Look at it. So yes, the deal is good until the end of the weekend. If you're not yet a TrendSpider trader, take advantage of it. You don't have to sign up for a year. You can sign up for a month. See if you like it. If you like it, you can always upgrade to a year. Second piece of information, and this is important. Thank you, Chris. Back at you, sir. These shows are made possible by you, right? Like, I can't do this if you're not here. So if you enjoy these shows and you're not already subscribed to the channel, subscribe to the channel so that you know when the shows are happening. I'm a little loose with my my time, my schedule for these shows. I try and do Monday, Wednesday, Friday. I try and do sometime in the morning, but it kind of varies depending on what I got to do. So if you like this show, give it a like, subscribe to the channel. If you want to go the extra mile and hit us up in chat, tell the support team how much you enjoy the show. Let them know. Because if the team knows that you guys like these shows, then guess what? I get to keep doing them. And we're trying to build something here. You know, I want to have 140 people here, not 14. So, yeah. Thank you so much for being here. Subscribe to the channel if you haven't already. If you're not already a TrendSpider trader, what are you waiting for? Now's the time. The deal is live. Take advantage of it. And I'm going to get out of here. It is just about the weekend. I hope you guys have an incredible, incredible weekend. Go out there, touch some grass, spend some time with your loved ones, maybe have a nice beer or two. Enjoy yourself. You worked hard this week. And we'll be back at it again next week for a whole new set of office hours, aka TrendSpider and Chill shows. Until then, guys, y'all be good. We'll see you soon. Take care. Bye-bye.